$4,000 gold may sound crazy, but it wasn't that long ago when many of us were thinking the same thing about $3,000 gold. I'm going to tell you what needs to happen in order for us to see this number and the time frame from which it could be possible in this video as we explore. Already, many institutions, respected analysts out there are predicting $3,200 gold for this year. And it likely could get there. I think most of us would agree. I'm thinking we may see $3,200 gold before the end of the year. But there's a couple of things that are working in gold's favor that could have it propel much higher than that. But before we get there, I want to remind you about Summit Metals, who is the sponsor of the channel. If you're interested in precious metals and next time you go to buy, take a look and see what they've got in terms of deals. You might be pleasantly surprised. I'm going to be referencing an article here from Finbold, and there's some things in here that I think make sense, but there's other things as well that could lead to gold reaching $4,000 an ounce this year. According to strategist Mike McGlone, he's forecasting that gold could target another record high as it seeks to establish its value above the $3,000 mark, and so far it's been holding above that for a little while now. According to McGlone, gold's next target lies at $4,000 an ounce and could be influenced by falling risk asset prices, declining treasury yields, and increasing global economic uncertainty, according to a recent posting that he made over on X. McGlone noted that gold has the potential to rally further if the United States Treasury yields decline. They're right now hovering about 4%. Treasuries may face downward pressure, especially compared to government bond yields in China and Japan, which remain below 2%. So yes, that is a big driver for sure. We've already are seeing some of these other interest rates and stuff fall, and that is part of what has kept gold up, as well as central banks continue to accumulate. But yes, and there's other factors, the geopolitical uncertainty as well, that could heat back up again, and in a sense, it has already in Gaza. The expert added that the discrepancy could drive investors towards alternative investments, assets such as gold, which has historically benefited from lower real interest rates. And think about this, folks. Gold is a non-yielding asset. It doesn't provide a yield. It just sits there. However, notwithstanding it has outperformed the S&P 500 during a vast span amount of time, and that means that really, in a sense, its rising price has made it a viable investment. I don't say those words lightly, folks. I don't like to think of precious metals as an investment. However, there are many who are doing just that, especially with a recent report that I made in a video about folks abandoning Bitcoin for gold. The safety and security of gold with a steady rising price is an attractive nature for folks rather than the volatility that we see with Bitcoin as of late. So this discrepancy could drive investors towards alternative investments, and thinking about folks out there looking to ways to protect themselves and hedge themselves with gold. On the other hand, the precious metal safe haven attribute could prove valuable if the stock market registers new lows. Although the market ended the last trading session on a high note, in fact today it's also up about 600 points for the Dow Jones Industrial Average, overall sentiment remains bearish as uncertainty surrounding President Donald Trump's tariffs continue to weigh on investors. And that is the one cog in the wheel on this, is that we're days away from them being implemented. And many people are expecting things to get crazy around them, but it may not. That's right. It may actually, with an announcement just today of Hyundai investing in steel in the state of Louisiana, that is another thing. As more and more companies come in, they will not have any tariffs. That's going to boost our economic outlook here in the United States. And so that could actually prove to be not so good for gold. And in that case, that is what we want. We want lower gold prices if the economy is going to do well. No question about that. So there's things like that you have to consider when you calculate these types of things. But notwithstanding, there's other areas of the economy that could hurt and suffer because of this, especially if it gets into an increased trade war. So that has investors nervous, and they want to go to where there's sound money and sound investment strategies, hedges, and gold provides that, and has been the case for many, many years in the stock market. People run to safe assets, including cash core accounts and gold. So this, based off of this outlook, investors are likely to turn defensive if equities sustain further losses. In this scenario, gold is likely to be the go-to asset for wealth preservation due to its store of value status. Status. Meanwhile, the strategists also noted that if risk assets such as cryptocurrencies remain bearish, there could be a capital shift to gold, which is already starting to happen, propelling the metal towards the $4,000 mark. As reported by Finbold, McGlone has suggested that the outflow from the risk assets such as Bitcoin is sustainable. The digital currency could drop to $10,000 an ounce, he says. That is quite a massive drop for sure. And Bitcoin is in consolidation mode right now. In fact, as I record this video, the cryptocurrency is trading right around $88,400 an ounce, or a Bitcoin. So it's up actually today. And of course, with the talk about a Bitcoin reserve and maybe using the revalued gold as a way to leverage to be able to provide money towards a Bitcoin reserve, that is going to have an adjustment too, or make an impact. So McGlone has suggested that this outflow of these assets are going to could potentially hurt Bitcoin down the road, although today that has not happened. It has paused its recent momentum in the terms of its price for the highly anticipated $3,000 mark. And if we see that occurring here, it's still holding above $3,000 an ounce, but just barely right now. But gold's slow momentum was partly triggered by the latest Federal Reserve interest rate decision, in which the institution opted to maintain at current levels. But they're also thinking there's going to be at least 2 rate cuts this year. If we see any other hiccups in the economic numbers, such as employment or GDP, which already the Atlanta Fed has said that there is at least there is negative GDP growth for the first quarter. If we see it again, that's 2 quarters. That means we're in a technical recession. The Federal Reserve may end up cutting rates even more. We'll see, but I think if they do these 2, I think that's going to be good for gold and silver, and that's going to help propel it up to the $4,000 mark. And again, other areas such as potential peace talks, crumbling in Ukraine, and more stress and more war going on there is going to lead to higher prices for gold. And nations, the BRICS nations, continuing to add to their reserves is also going to bolster gold's price and moving up past the $3,200 mark. And conceivably, even if things get crazy this year in a combination of those factors, that could lead to gold reaching to $4,000, maybe even this year. I kind of doubt that's going to happen, but as the gold is now $3,000 an ounce, and everybody bullish on the metal, it is quite possible we could see a number of different factors weighing in. What is keeping gold's price high? Well, I think what's keeping it high is the fact that central banks continue to hold it. 27% of the gold that is mined out of the ground is in central banks around the world. And if we revalue our gold to market price, I think psychologically that could have an impact as well on the numbers. And even though it really doesn't matter, because it's the book price is really immaterial to the market in and of itself. But sentiment for around gold remains bullish, driven by these geopolitical tensions, including the conflict in Gaza and ongoing economic uncertainty. and the tariffs, depending on what happens with the tariff, with a trade war, where we very well could continue to see bullish sentiment for gold and moving it up and up and up. But we'll see. Now, again, I doubt it's going to happen this year, and I really don't think it's going to get there. But if these things happen in conjunction with each other, and there's more fear driving the markets, and with two or more of these factors playing a big role, then it is quite possible that we could see $4,000 gold. Crazy. But there you have it. Let me know what your thoughts are in the comment section below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.